Hello, welcome back to class. We are getting to the end of the course gradually. This is the ninth module. And we'll be talking about activity-based costing and modern costs management techniques. Modern cost management techniques, and we will briefly look into concepts and importance of the activity-based costing. We will look into comparison between traditional and activity-based costing. We'll look at cost driver and cost pool, and then we'll look at some other modern costings, which is in theory, costing, target costing, and life cycle costing briefly. And why do we need, why the need for a new costing method over traditional costing? Now, there have been traditional method of costing, and now there is a clamor for new costing method. And in today's dynamic and highly competitive business environment, organizations are increasingly compelled to refine their cost management system to achieve greater efficiency, accuracy, and strategic control over resources. And traditional costing method, which often allocate overhead based on broad average, are proven inadequate in capturing the true cost and the complex production processes. So that's why the ABC and other modern cost management techniques have emerged as more precise and strategic tools for managerial decision making. What is activity-based costing then? It is actually an advanced costing methodology designed to provide a more accurate understanding of how resources are consumed within an organization. And it focuses on tracing costs to the specific activities that generate them, rather than relying solely on the broad volume-based allocation basis, such as the direct labor or machine hire used in traditional costing system. And it asks the question, what activity does a product require, and how much do those activity cost? And the process of activity-based costings are: one, identifying key activities like setting up machines, inspecting qualities, and also the next is group cost into cost pool for each activity. The next process of step is find a cost driver for each pool, and then assign costs to product based on their actual use of each activity. Now, let's bring this to the traditional costing together with the activity-based costing. Let's bring them together. And when we talk about this, let's look at the cost focus. The traditional costing actually focuses on the product volume, while the activity-based costing focuses on activity and processes. And then, as per the overhead allocation, it has a single volume-based rate. It makes use of single volume-based rate. And for activity-based costing, it is multiple activity-based driven. And for accuracy, it is from low to moderate for traditional costing, and for activity-based costing, it's actually high. And it is actually best for simple uniform production under the traditional costing, while under the activity-based costing, it's best for complex multiple product businesses. And in terms of identifying of waste, for traditional costing, it's actually difficult to identify waste, while under activity-based costing, it is easy for the identification of waste in production process. And what is cost pool and cost driver? Talking about cost pool, it is actually a grouping of individual cost items that shares a common cost or are incurred for performing a particular activity. And in ABC, overhead costs are not assigned directly to products or services. Rather, they are first collected into cost pool representing specific activities or processes. An example of this is machine setup cost pool, which talks about the salary, the equipment cost, and also the quality inspection cost pool, talking about the inspection wage, testing materials, and more. And now for the cost driver, this is the thing that causes the costs in the pool to change. And in ABC, cost drivers are used to assign cost from each cost pool to cost object in proportion to the extent that the cost object uses the activity. An example of this is driver for setup pool, and this talks about the number of setup, and driver for inspection pool, talking about the number of inspection. Now, looking beyond the ABC, we have some other ones that are very important to look at in the modern costing management techniques. And in essence, casing, costing, target costing, and life cycle costing represent three pillars of modern cost management that shift the focus from mere cost recording to strategic cost control and continuous improvement. For the casing costing, it actually emphasizes ongoing operational efficiency and incremental cost reduction after production begins. And for target costing, it ensures that cost efficiency and profitability are embedded during the design stage, which aligns production cost with customer expectation and market reality. And for the life cycle costing, it actually adopts holistic perspective accounting for every cost incurred throughout a product life to promote long-term sustainability and profitability. Together, these techniques empower organizations to remain competitive, deliver superior value to customers, and achieve sustained financial performance in a rapidly evolving global business environment. Why did this matter to is this a matter to the managers? One, it helps to know the true cost of the products to price and to price them correctly. It helps to know true cost of your products to price them correctly. And also it helps managers to be able to make smart choice about product mix, outsourcing, and process design. It also helps managers to be able to identify and eliminate non-value added activities like waste. It also helps to ensure products are designed and managed for productivity or profitability from day one. And lastly, it helps to compete effectively by managing costs strategically throughout the product life. In conclusion, activity-based costing provides accurate cost by tracing overhead to activity, and the cost pool group activity cost while the cost driver measures activity usage. We've also seen target costing where you see it as that which design cost out of a product before it's made. We also see casing costing, focusing on continuous incremental cost reduction, and also we see the life cycle costing as one that tracks all costs from initial idea to final disposal. Together, these are powerful tools for modern strategic cost management. Thank you.